Hello, Warriors. How's everyone doing? I don't know what that was. Sounded like a test. This is only a test. So I see
Did
Ryan's
you get a funny
here.
noise?
Yeah. Did you?
No, but it seems to happen every time I join the webinar and join the audio.
Huh.
But I don't hear it. So
okay, I don't hear it anymore.
But did you guys hear that weird noise
Yeah.
too?
Yeah, it was like a test, what you used to hear on your TV.
Yeah.
It's only a test.
Yeah, some people
emergency broadcast system.
Some people reported on the Flow show hearing it as well when I join the audio. So
it's strange.
Anyway, the outer limits. So looks like we're front running the ECB here. What do you think, Ryan? This action convincing to you?
Yeah, pretty significant comment from Lagarde this morning. She's been all about end QE, beginning of Q3, raise rates some weeks later. Even last night, over the weekend, there was a speech where she said those same lines some weeks later. But this morning she came out and she said she's looking to end QE and that rates will not be at negative by the end of Q3. There's only 2 meetings in Q3, so the only negative rate is the deposit rate, minus 0.5. So if it's not going to be negative by the end of Q3, that means 2 rate hikes of at least 25 pips.
Okay, so can we declare a bottom at 103.50?
Oh, I don't know. 5 days later, yeah, I'll let you have that one.
Huh? Okay.
Looks pretty much, doesn't it?
Well, I mean, now you have confirmation, right? You wanted to see, action over 106, and
that was high as 106.35. There looked to be some stops through that area. That was the high we got to when we got through 106. That was my main level, 106.35, and the stops have been run, and 107's next. And
yen, despite dollar weakness, is still holding last week's lows. Still, I have some confluence down here. We're going to get a pop in the yen because of risk on.
It's not doing so this morning. So it looks like it's everything else doing the pull.
Yeah, I'm surprised with the dollar weakness. We didn't take out, I don't know what, this must have been Thursday's low yet.
Yeah, well, I got stopped on my long from 127 overnight. Last week, how long have we been saying about this 127 level being important to confirm the 127, 131 range. So a load of us bought into that low last week. Got stopped overnight, but it confirmed the support down there. I think 127.14 was the low.
Yeah, same as I think Thursday's low right here.
Yeah, last night.
02. So 02 Thursday and 14 last night. I mean, it doesn't look bearish to me. I mean, we've worked off the overbought condition without doing much damage in price at all. Almost looks like a flag and it could blow one more time.
Possibly, but it's not looking like it's bouncing strongly, which is the worry. The more we come down and test that 127, the more I'll be thinking that it's got the potential for a break, and then I'll be potentially looking at trading some sell stops underneath 127 to try and catch a break.
And the dollar, I know we were all looking at this 102.35 level, being the breakout over those, that line from, all the way back here in the COVID high, and held it while it, had one test or so where it, tested it out here, and now we're rolling over. So, the dollar, it was way overbought. So I guess, can you declare it just like Euro a top? Or is this a break to buy? I think there'll probably be a lot of people trying to buy this dip, but the fact that it's testing this major breakout, I don't think is a great sign for the dollar.
No, but as we've been saying, we know what the Fed are doing. Look at yields, 2.8% in 10s. It's really going a bit sideways at the moment. Dollar yen's following that. And the switch is now over to the ECB. What's the ECB going to do? And as that's obviously a big component of the Dixie, it's going to be the leader. If it can't get above 107 and I've got a fib from the year's move at 107.80, I think 89 off the top of my head. If you can't get above there, then you're going to start finding your bottom in Dixie there.
Okay, so you're talking about Euro up here.
Yeah.
Okay, there's a 50-day moving average. It comes in right around there.
Yeah. Okay. I've got a fib around there as well. So, yeah, big lip, but small steps in the wider time frame. You look at the weekly there.
And of course, the stellar weakness is giving a little jet fuel to the turn we had in metals last week.
Something's got to wake it up, isn't it?
Huh?
Something's got to wake gold up.
Yeah. Well, we've had an $80 rally. I don't know if I would chase it here, but if the ECB disappoints in any way, from what Lagarde has said, I don't know how they could. It's got to be all in the market, and we get some type of pop in the dollar. If there's a pullback to 1830, 1820 in gold, I'd be a buyer. And then silver, if we pulled back to, 21, I think Grega showed a chart last week. He thought we could pull back towards 2110. That'd be a nice break to buy. And if you bought it last week, I'd be taking some off here.
Yeah. What's the silver version of King Midas? Because we need to name that for Stel.
Dale Pinkert.
Only the opposite. Whatever I touch turns into crap. No, sorry.
the Dale Pinkert is the
This is it. They're silver.
Right. Oh, there you go.
Silver 2022, man.
We're catching up.
I didn't mean to tell you all my passwords, but anyway, so there's some silver for you. And I had it when it was $5.
You should keep your clippings.
Yeah. So good to hear your voice, Stel.
Hey guys, good morning everybody, guys and girls.
So you getting any FOMO in silver, or are you gonna wait?
I'm still waiting.
Okay.
I'm waiting basically because of Grega's count, and I almost never want to go against him, so I'm gonna be a bit more patient. Now, talking about the ECB and Lagarde, remember only a few trading days ago, we were around 105, below that 104s. And, I was saying, look, I think we're building a base. I think the odds of the ECB surprising to the hawkish side are rising, and the odds of the Fed surprising to the dovish side are rising. And whenever things go so, diverge so much, I think it always kind of nags me, and I want to be on the other side of that. And I think this is the start of the ECB kind of. They're never going to be full on hawkish. They're never going to do what the Fed is doing. But you don't want that. If you're long the euro, you just want this the sentiment and this kind of rhetoric to persist. And I think it will, because let's face it, with 7.5% inflation, I really don't see how they can do a lot different to what the Fed is doing. End of story. Yes, the ECB, they're naturally more inclined to be dovish for some reason, same as the Bank of England, but they're going to have to do something at some point. So I think we may have seen the lows now in the euro dollar and euro pound for sure.
You just buy it anywhere, or are you looking to finesse your way in? I own euro in cash. I didn't leverage it, and look, I started buying it at 110 in cash. It didn't matter to me.
Yeah.
So I don't want to sit in dollars anymore. So when you look at this, how do you what's actionable? Is K-Man's not around today?
No, he's taking the day off today.
Okay. I want to bring Blake in for that, but here, guys, I have to vote that this was the sneakiest move of the year in the S&Ps on Friday. The market's crashing. It's a Friday. Who expects a big reversal? And it all happened in the last 45 minutes.
Yeah.
The sneakiest reversal on a Friday afternoon.
Yeah.
Wasn't
and
that
gave us breakdowns and everything.
Yeah, they
Does that
waited
not just
for
show the
everyone.
OPEX effect? The big option expiry. It's the big option expiry event.
That's right.
And that looks suspiciously like that. Just like we get in FX fixes at the end of the months and end of quarters, that sort of thing, where it just doesn't make sense to the rest of the market.
Yeah. I haven't seen that in a while, but I will say this, that, this has been the weakness. People are most bearish Russell. Russell did not make a new low with the rest of the indices on Friday, and either did the semis. So, I wouldn't chase it, but, if you say, for example, you had a pullback from here, like starts going through 39.60, that may not happen, but why not some type of fib retrace from here to buy a break and then risk the low? But this was the sneakiest reversal. I mean, I walked away and then I came back and looked at the close and I couldn't believe it.
Yep.
Huh?
Yeah.
Yeah, it was gross, and all the
gross.
I mean, it was gross. It was a gross move. I mean, it was like it just plowed everybody's stops and then reversed. Fortunately, when I was pretty much focused on FX, and for those of you that don't know, FX on a Friday usually doesn't move. You can have equity, like after Europe goes home, you can have equities move pretty aggressively. And the currency market is just not going to move a whole lot. So, I was happy about that because I'm going to say more times than not, like, if I had to put a number on it, I'd say 85% of the time after Europe goes home on a Friday, it doesn't matter if, equities can rally 1% or drop 1% or more. And we were down we were down 4% at one point, Dale. Yeah. So, we just kept dropping and the dollar never firmed up, which, that's all I cared about because I wasn't short equities. Yeah. So I was just, I was short the dollar on Friday and I was sitting there watching it just in case, because it's that one time or, very few times, but one time that, the stock market is just peeling away percentage points, and then somebody starts running in buying dollars. But that didn't end up happening, which I was happy about because we obviously got a reversal back. I think we probably closed the day down maybe 3%. I don't know. I didn't check the final close, but we did reverse that, and the dollar continued to stay under pressure up until today. So
yeah. It was just, I haven't seen a Friday reversal like that without there being like an NFP or something like that. So,
yeah. Hey, Stelios and Ryan, I'm gonna step away here in a second with one of our developers. We have an issue with our chat room. Like, there's 3 of us. Like, out of all the people, there's 3 of us that our charts aren't uploading, and it's kind of strange. So
just get another laptop, man. It'll solve it.
Yeah. So I'm going to be doing that here in a second. Right. So let me just take a minute.
The screen. Yeah, go ahead.
Yeah. Let me just take a minute and go over a couple of things before I leave. Hold on. Just have to.
Oh, by the way, Lynn, who seems to be one of the people who had the problem, says it seems to be fixed now.
Yeah, there's a couple people that say it is fixed. Mine isn't, and it's one of those weird. One of those weird situations. So, like, if you guys can see my screen here, you can see that like I've got this like retry thing, but we there's a few of us that have it. It's so one of the weirdest things. Anyway,
is it not an ID 10T error? Like, might be an ID 10T error.
I don't. You don't. Are you really asking me that? So okay. So let's talk a little bit about what we're seeing. First of all, did you guys see the new F.A.C.E experience page that we have? Pretty cool. All right, guys. So check that out. We have a standalone website for this show, which is great. But let's talk a little bit about the dollar. I've been really. What's that, Dale?
Great work by Steve and the team and developers.
Yeah, it's great. So as most of you guys know, I've been short the dollar. I talked about in the week ahead that I think the dollar is, at risk of a pullback. We broke back below 102.30, and that was really predominantly due to Christine Lagarde's comments. And correct me if I'm wrong, guys, but that's probably what like between that and the Australian election too. You had the Australian election and the Labor Party won, and we, as I mentioned on the week ahead video, there was a good chance that we're going to strengthen and recover in the Aussie. If you look at the last like 9 elections, the next 2 weeks, the Aussie dollar tends to rally quite a bit on average. So it was and like I said that in the week ahead video, and we're getting a pretty big move. I mean, we're up 1% in the Aussie. We have an inverted head and shoulder pattern. Euro dollar, we just completed a flag pattern, just in case you guys wanted to know that. The euro just completed it, and the dollar index looks like it's going to weaken here. I think that there's more, depending on where the dollar closes. I think there's more weakness to come. Now, I want to mention that as the dollar weakens, that's going to be a tailwind for corporations. It's going to be a tailwind for risk appetite. It is going to, probably allow for commodities to continue to rally if the dollar comes off a little bit. So just think about like some of the repercussions as the dollar comes off. But what we're seeing in the S&P is we're seeing a nice little reversal here in the S&P, and that this is what Dale was talking about, that little false breakdown. Yeah, we get much above this. The highs of today, 39.50, 39.60. We should squeeze back towards the 4,100 level in the S&P. So to me, it seems like the dollar is currently pulling back, and that's going to help risk. That's kind of the way I'm looking at it. I mean, you look at, even Bitcoin is back above 30K, and you're seeing, gold and silver a little stronger today as well. So I think it all looks favorable for the rest of today, that you're going to see, continued dollar weakness. I'm just, at this point in time, I took a lot of profits off the table, about an hour or two ago. And or hour ago, and I'm going to be adding back to all the positions that I took off the table. And if you don't know where, you don't know what I'm doing here, then you should jump in the ForexAnalytix chat rooms, and I post all my positions there and what I'm doing. So anyway, I'm going to pass it back over to you guys, because I'm going to go online with and do a screen share with our developers. All right,
go for it.
Hey,
all right, guys.
Hey, good luck, Blake. Stel, why don't you grab the screen? We haven't seen, or Ryan, haven't seen your charts for a while. Kind of see what I know. They're macro.
No, Dale, you just don't get up early enough to see his charts. He's on the flow show every day, buddy. He's on the flow show. Why don't you tell us North American people? Show us what us North American people are missing, Ryan. How about that?
Everything. You're not missing everything. Half the day's gone by the time you lot get up. Are you going to take them, Stel, or do you want me to take them?
Whatever you want. Okay, let me take it for 5 minutes, and then you can.
Yeah, we'll do take them.
First of all, we had
my guess.
We had some German consumer business confidence numbers today. Just want to mention that came in better than expected. And I'm struggling to see how that is, because we had PPI. Do you guys remember the number? PPI, German PPI last week on Friday, 33, I think, % year on year. Now, how businesses can be optimistic with costs rising that much, I have no idea, because they're not going to pass on the whole of the cost to the consumer, not even close. So I don't get it, but sentiment seems to be running high on for German businesses, maybe not for much longer, I don't know. But that was a very interesting print. And the other thing I want to mention before I look at a few charts was, what was it? I forgot now, actually.
Guys, there's a rumor circulating there was an unsuccessful coup against
Putin. That circulates every 2 days, right?
Oh, really? I just saw it.
I've heard that.
Well, funny enough,
Maybe
ambassador,
they'll get it right one day.
The Russian ambassador to the UN resigned and wrote a really strong letter about why he's resigning. He's ashamed of his country. So definitely some of let's call it the bigger names in Russia are taking note. If it spreads, could be the beginning of the end.
Yeah. And the other thing I wanted to mention was I think my time machine is working finally, because we're talking about Brexit again and about the China sanction, the tariffs. Did you see the headlines where Joe Biden is saying he's going to be reconsidering the China tariffs put on by Donald Trump? And I guess this is one of the reasons why equity markets are buoyant today.
Well, Larry Summers endorsed that too.
Yeah. So great. Let's. I'm looking forward to more of that.
But then in the next breath, he said that the US will step into Taiwan. With action if China invades. So tariffs on one hand, war on the other. Great mix.
Anyway, so the euro. We talked about this before. Look at the weekly chart on the euro dollar. This area around here, what is it? High 103s to 105. Very, very important, I think. And we seem to have bounced again from there. So I wouldn't be surprised. I said before, a couple of weeks ago, I said, look, I think this divergence is gonna go the other way, and I think we're going to be heading towards 120, and I'm sure people laughed. Now I don't know how long it's going to take, but I think that's a direction. That's a general direction.
That's a great look. Looking at the weekly you're showing there, because basically, why can't we rally all the way back to the top of the range and have this big rectangle from 26 to 05?
And this looks very similar to the euro pound. Right, and I think we're on our way towards the 90s again. Obviously, nothing goes in a straight line, but I think this is the bias, and my bias has been bullish on this, and it is bullish on the euro dollar. And
it's been advancing while there's been successive new lows in euro, which is a divergence.
Yes, right. Correct. And talking about equities, it's funny. We bounced right off the 38.2 retracement, which was at 38.12. I think almost to the pip. It's incredible how technicals work sometimes.
I'm still always amazed. So.
Yeah, and I think it could be that we could head towards 4,200 now as a kind of a bear market rally. That will take out a lot of shorts. And I think the path of least resistance now, my bias is still firmly bearish on equities as long as yields are high and central banks are tightening, especially if the ECB joins the game now and the Fed doesn't disappoint too much. I think the Fed will disappoint eventually, but as long as this is the case, I think, I know my bias is bearish, but I wouldn't rule out a nice bounce towards 4,200, 4,150. Take out all the shorts, initiate new longs, and then just crap out completely. I think I still think 3,400, 3,500 around there, the pre-COVID highs, is a place where the Fed will take notice, and they are going to tell us in a pretty strong way, I think. Cryptos, they've become a very important instrument, right? There are lots of money plowed into it, so we have to look at that. The break was significant of that kind of very, very broad channel. We are finding, we did break below those previous lows, but we are finding kind of support and consolidating in here. Next move is important. Same with Ethereum. I still think the direction is lower, same as equities. And let's face it, they are linked, they are correlated. But we could easily rally back towards 36,000, 35, 36 in Bitcoin very easily before we turn around again. And maybe worth looking at yields as well. We almost made it, 10-year US almost made it to those previous highs from late 2018, the taper tantrum days. And now we're consolidating. I think we are consolidating on our way to higher yields. But it could take some time, but that's my view. My view is bearish on bonds, bearish on equities. I think these two are going to continue to move in tandem. They had been moving higher together for 12 years. They're going to be moving lower together, I think, for a little bit longer. Yeah, that's it from me. I don't know if you want to take the last few minutes, Brian.
Yeah, people are clamoring for Brian's black charts, black background charts.
I don't think I've got much to add compared to what Stel's. I don't think I've got much more to add to what Stel's got. Let's have a.
Yeah, but everyone wants to see your background on your chart.
You can see my background. I like.
Hey, look at that. I used to use black too. I like the look.
Easy on the eyes. Easy on the eyes. But
it's goth. It's goth technicals.
Always like to. I'm a bit of a metal Dale, so you're not far from the truth there.
Yeah.
Not quite goth though. But you know, it's amazing what you say about the tech levels. You know, look at that fib. Absolutely spot on. You know, and when you get clean tech levels like that, you know, let's look at dollar yen. You know, this is what we were talking about all last week. Are we going to find support 127? Yeah. You don't get tech cleaner than that. You know, that's why sometimes when you get these technical levels that look as strong as that, you just got to have a go. You know, you don't even have to be brave about it. You just got to test it. And the same with, you know, euro dollar. You know, this was the level here, 16.35. Here's the break, and off it goes to, you know, the races. But for this one, it's all about the small steps. You know, we've put in a potential bottom here. We've got back above the 105 level. That will be solid support once again, as one of the guys, Ronit, is saying. 105 solid again. But, you know, take it back, just look at it from the early years move. That 38.2 fib isn't until, you know, 107, 86, 87. You know, come a bit further out, look at a weekly. And, you know, I'm not even going to bother drawing the fib from the 120s.
How about getting back above your yellow uptrend line that it broke? Where's that come in?
That one there, that's coming in from 2017. So give or take a few shekels. We're looking at 108.30s, 40s.
Yeah,
about there.
So getting back in that channel would be a pretty important signal.
Yeah. But, you know, until we can get above, say, the 109 area and the 50 fib of just the year's move, you know, you've got this whole big, you know, 2-year trend to deal with. You know, we can get all the way up to 109, 110, and it still doesn't mean the trend has changed. But that's the beauty of markets and what context and time frame you're looking at stuff over.
So you know, if you missed it, and I'm sure a lot of people did, there were 95% bulls. Great trade by Blake, and guidance on looking for a lower dollar today. And you know, you can wait for this wave to complete wherever it does, and you know, and then look for fib retracements to get long.
Yeah, and as I was saying to the folks in the room, you don't use fibs just to get in. You use it to manage your trades on the way as well.
Yeah.
I'm long euro dollar. If it gets up to that 38.2 fib, I've got a question to ask myself: do I take some profit? You know, what do I do if it fails there and we don't break it? You know, so it's just about as much as managing trades as it is getting in, using levels to get in and out.
True.
Who you got on today? You got an interview today?
Yeah, I have. I'm just promoting Jerry Robinson.
I shall keep talking then. I see him in the chat there. Yeah.
Yeah, and so you have a couple more minutes to, you know, kind of wrap it up and.
So another thing we just touched on quickly is the Rbnz. Obviously, this week, they're expected to hike rates as well. It's been a bit of a mix and match with expectations. The market is pumping for, they know it's going to hike at least 25 pips, but the argument's going to be whether it's going to be 50 pips or not. The Rbnz did draw down expectations a bit over the last couple of weeks, but the market's still going full throttle, 50 pips. So if they don't hike by 50, you're going to see the Kiwi dip. And if that's going against this trend of a bit of dollar weakness, that might be worth looking at for a fade perhaps.
Okay, so congratulations on the Flow show.
Thank you very much, mate.
Again, a lot of people, it was really a need that people needed based upon a lot lot of Europeans in that time zone, and having an analyst like you, I'm sure you're going to have hundreds and hundreds of people in there watching you, Ryan, before you.
Yeah, well, then, thanks, mate. The numbers are growing, so it's going to be a work in progress. You know, I've only just started it, so you know we'll shape it as we go along. I'll put the link in the chat there. Anyone wants to come along in the morning, listen to me and the K-Man waffling on. We got some good discussions going, and we get a lot of input from the folks in the chat, which is good as well.
I'll tell you what, I wish I could be up that time in the morning, to listen in, and for anybody that's around. I just retweeted the recording of it, so you guys can check that out too. We're posting the recordings, but they're obviously hours later. There's nothing better than being in live analysis when it's live. So I just want to also congratulate you. Really, really great job. And I wanted to pop in and say goodbye, everybody. So, all right.
Okay, buddy. Blake, Ryan, Stel, thanks very much, team. Appreciate the coverage and the ideas, giving people a feel for what you're thinking going into what is, a very interesting potential turn in the dollar. And really enjoyed working with all of you guys. So
thanks. Same here, Dale.
All right.
Thank you.
All right. So Jerry Robinson, pleasure to meet you. Looking forward to having a conversation. Interesting action today for us to be getting together to follow the money.
Yeah, great to be here, Dale.
Yeah.
I assume you can hear me okay?
Yeah, got it, Jerry. And if you want to share your screen, I don't know if you've been in Zoom before, but at the bottom of the black box, you'll see a green share screen button.
Oh, yeah. Sure.
Let me show it.
Let me do that.
And I appreciate you being here, marking your calendar, because I know it was made a bit ago, the schedule. So,
oh, yeah.
So, Jerry, what I like to do before we get into, you even have a nice little PowerPoint, is talk about a little about your journey and, maybe take us back to point A, what were you doing before you got into the trading industry, and how did you cut your teeth in it? What was your first position?
Wow,
in the trading business.
That's really neat. Well, just kind of personal. Whenever I was growing up, my mother was a stockbroker, and she actually became a stockbroker whenever I was in middle school. And so she was home practicing for the Series 7 a lot. And it's a pretty tough test. Anybody's taking the Series 7. And, she was new to the field, so she was having to cut her teeth in that stuff. And I was helping her learn. I was helping her study. And so I began early on to kind of understand some of these concepts. And later on, when I got my first real corporate job, I was itching to remain with Wall Street. I was itching to, focus on stocks. And I had a friend there who was a part-time trader, and he didn't really know what he was doing, but he was making a little bit of money. This was the dot-com era, 1996, 1997. Right before the big,
right.
Big
everyone was a genius back then.
Oh yeah,
right?
yeah.
Huh?
Exactly, Dale.
So kind of like going into 2022.
Exactly. Everybody was smart, exactly. Everybody was smart in the casino, right? And so, but yeah, here it was in the late 90s, and I was learning from this corporate friend of mine, how to trade, and not learning very well. Again, he didn't have too many rules, but I began trading, and that was really the beginning. So I traded my first stock in 1996. I traded my first option in 2002, and then I bought my first cryptocurrency in 2012. And so that's kind of my journey, my foray into the market. And I'm still trading today. I teach people how to trade. I teach people how to invest. And they're two very different things, Dale, as you well know. They're not the same.
It's all about time frames on that, Jerry, right?
Oh, so true. So true.
All right. So you were an early adopter, I'd call it, 10 years ago in crypto.
Yeah, I was fortunate, very, very fortunate to be introduced by a very early adopter by the name of Trace Mayer, who just in a similar situation like this, he was a guest on my show in 2011, and he was saying, "Have you heard of this thing called Bitcoin?" And I said, "No." So pretty neat.
Yeah, and so I'm going to try and be quiet and interject. So why don't you take us through what you brought us today?
Well, I wasn't exactly
and you
sure.
were very fortunate, your journey to have your mom, and then, were there any books or trading style that, was a big influence for you?
Oh, sure. Yeah, I was greatly influenced by two individuals. One, especially William J. O'Neill, and I highly recommend his book,
Relative
How to Make
Strength.
Money in Stocks.
Right.
Everybody's heard of O'Neill, or they've heard of Investors Business Daily.
Right.
I don't really take Investors Business Daily today, but I do really appreciate his book and his style, his can slim approach. I think it's great.
Yeah.
And then this is kind of an interesting one that's kind of gimmicky almost, but I ran into Nicholas Darvis's book early on, How I Made $2 million in the Stock Market. Total gimmicky title, and I expected it to be pretty gimmicky. But when you read through it, it's very, very valuable. He warns you about a lot of the things that you can go off on the trail and end up losing your money. He really teaches the importance of price action, volume, things like that. So it's a great
Darvis
read.
Box. Yeah.
The Darvis Box. Yeah, it's a wonderful read, and it's a nice, encouraging read, I think, for those who are new, to see that they really can learn if they can get through the forbidden forest of all of the pitfalls, that await a trader.
All right. So tell us your story now and what you do at Follow the Money.
Right. So followthemoney.com is where we educate, equip, and empower people to break free financially. So this has been a journey of mine and my wife's now for over a decade. I wrote a book back in 2008, and it became a bestseller called Bankruptcy of Our Nation. It was right around the time of the economic collapse. And in that book, what I was doing was I was explaining what was behind some of the problems with the 2008 crash, but more specifically, how people could rewire their financial lives to be better equipped for more problems ahead, because we didn't think that the Fed boom bust cycle was going to end anytime soon. And sure enough, we're living through more of it. And so how you do that is, of course, you have a very holistic process. And so we teach that for free at our website. We have a podcast, followthemoney.com. You can sign up for our free email list. We have lots of free stuff there. But we also have a membership, and the membership is for people who say, look, I'm a trader, but I want to be a better trader. I'm an investor, but I want to be a better investor. And what we do is we provide resources, tools, courses, and all of those things. And we have just gobs and gobs of them. So it doesn't really matter if you're into cryptos or options or stocks. We've got courses that we've created, to help you kind of navigate that. So that's what Follow the Money is. We, again, for those who are listening and to say, hey, I'd like to learn more, just go to followthemoney.com and just listen to our latest podcast, or, sign up for our free email list, and you can get more info.
All right. So let me ask you, since the market has become more two-sided, and there's been a lot of fear on the street, although not reflected in the VIX, you have any market views you want to share with us today? Besides what you could show us your setup, what kind of charts you use, and how you.
Yeah, what I just did here, Dale, was I just threw up something. I wasn't exactly sure what to share today, because I wasn't sure where you wanted to go. But I just put up our latest issue of the Robinson Report. So this is a journal that goes out every weekend to all of our members. And I just thought I would share this. Sure. I'll just scroll down to some of the noteworthy things here. Let me scroll down to say our market trends. This might be a really good page right here, just to briefly discuss what we see. Okay. So we track the markets with 3 different time frames: the swing, which is the daily; the position, which is the weekly; and the long term, which is the monthly. It's hard to make monthly calls before you have the entire monthly data, until you have the entire monthly candle. The S&P looks like it's getting ready to form a brand new long-term downtrend. Now, what's interesting about that is that we've been measuring this now for quite a while. For the last decade, almost every time the S&P 500 forms a new long-term downtrend in our system, we get a pivot from the Fed. Now, this is how the Fed has been reacting up until this time. The Fed constantly talks about how it's interested in economics and unemployment and all of these other unrelated figures that are not related to those. But in reality, it almost seems like they're looking at a chart of the S&P 500 and reacting based upon that.
Peter Bookvar says the Fed is not data dependent; they're S&P dependent.
Right. I think that's a bumper sticker. That's a perfect way to put it.
Yeah.
So the Dow
You
just
could
went
steal
through.
it.
What's that?
You could use it.
Yeah, right. Exactly.
Just
Yeah.
give Peter credit. Buy Peter.
That's a great one. I'm so glad you said it. I'll have to
all right.
keep that handy. Now the Dow Jones is down for like 8 weeks in a row. You have to go back to the Great Depression to find this kind of sell off. And this is intense, but this was a liquidity bubble, Dale. They just pumped too much money in. So all the money's just slowly easing back. Not all of it, but much of it's easing back out. And so it's not really surprising to see this. The only two markets that are green across the board and that have been working for our members all year has been the dollar and oil, right? They've been working great. So when we today is an interesting day in the dollar. So what would it take to flip your green arrow, at least short term, from up to sideways to down? So on the dollar right now, if we just look, in fact, I have a chart of the dollar we'll just go to. It's down here. We'll get right to it. So we can see that we've had a really nice rally in the dollar that we saw coming with the 200-day moving average breakout early in 2021. It kind of hesitated, stumbled, but then it finally really broke out in September of 2001. And that's where we really began to see it begin to get some motion. And by the end of the year, of course, it was off to the racetracks.
Way before the war.
Right. Now, we touched 105. We haven't been there in about 20 years. So it's been quite a while. I mean, even that 2014 rally, or was it the 2016 rally? I forget the rally in the dollar, the last really good rally. We had the juicy one besides the 2020.
Yeah.
Well, but before COVID.
Oh, yeah. 2017, 18, we were up there.
Yeah.
During the taper tantrum.
Right. But even during that time, we just didn't get that same kind of blistering rally that we've got here. So we got all the way up to 105 and we pulled back. Now, why are we pulling back? First of all, we probably are about to go red on that very first daily. Based upon what we're seeing here. It all depends on what happens today. But today it looks like the dollar's down another almost 1% as I'm reading this. So, that's why is that? Why is the dollar go straight up and then come down like it's doing right now? Well, we believe that it has to do with the interest rate expectations drove the dollar up. But then now the market is realizing that the recession and fears of a recession look much more clear. In fact, the SEC chief is saying a recession is, coming or we're already in it. And so people are beginning to sense, oh no, we're in a recession. And so what does the Fed do in a recession? Does it keep raising interest rates in a ham-handed way? No. It has to ease off a little bit. So if we are entering a recession, and I'm not making a declaration that we are, but if we do enter a recession, then the Fed is going to have to be sensitive to that. And that's why the dollar's pulling back. That's why gold is perking up. That's why interest rate yields are pulling back, because this is just a moment where we got to stay, if there's a recession, the Fed might pivot earlier than we expected.
And a pivot doesn't necessarily mean reversing. It could just mean a pause.
Correct. And that would be enough to take some of the pressure, off of some of these stocks. Dale, it's, having done this, I've been trading now for 25 years. It's hard to believe. And I don't know how long you've been in the business or how long you've been doing it, but
I can't remember.
Yeah. Okay. Well, that's a good sign that you've been doing it for a while. So, but I don't know about you, Dale, but I've seen a lot of things. This whole thing has just been a circus. I mean, it really has been wild. And seeing all of the new traders come in 2020, 2021 was almost like you wanted to step in as a parent and say, slow down, stop, be careful, because this is a trap. I mean, of course, the liquidity bubble was going to send prices up, but then, boy, we've had some vicious downturns in some high quality companies.
And losing 25% overnight,
right?
And all the big gap downs that I think started with Netflix.
Right. And then Facebook, and then
Amazon. They
and
all
then
did.
Walmart and Target.
Yeah. I mean, do you think it could be because it's all, the market structure when you started, there were still human beings involved in the process, specialists, market makers, and now the market structure is less stable?
Yes, I would say Robinhood has contributed to that somewhat. And I don't want to blame the retail investor entirely, because it's clearly there were problems before he showed up in any kind of meaningful way.
Well, I mean, the specialists were a bit of a circuit breaker. They had to provide bids.
Correct.
That was part of their, that was part of their mission, was to provide liquidity. And, when the machines do, there you go. So,
Walmart here, for example, I mean, this is a high quality company. If you look at companies just on a revenue basis and say, which company out of all the companies in the world, Dale, takes in more money into the register every single year, it's Walmart. Nobody has more revenues than Walmart. There's just no company on earth that has more. In fact, the only institution that even rivals Walmart would be something like the Pentagon, which receives an income of around $800 billion, every year. So, so
Walmart and the Pentagon. I never heard that analogy. That's pretty good.
Yeah. Walmart's taken in 500 billion plus into its registers. It doesn't keep all that, of course, but it takes a lot in. And so a lot of people depend upon this massive company. And to see this worst day in 35 years, we've been through a lot the last 35 years, Dale. So for this to happen now kind of speaks. And then if you look at, say, Target, for example, it followed the same narrative. Yeah. One that I'm excited about, though, is Costco. Costco has also fallen from about 600 down to about 420 as of this print. Yeah. And, that's Costco is a very well-run company. It's one of my favorites. So I am looking to pick up shares of this one once, the bleeding comes to an end.
Fill the gap at 480.
It's probably going to have to, but I may buy it, not as a trader, but as a longer term investor. I might just have to get some of this, for a longer term, especially if it keeps going down. I'm very, very attracted to Costco.
Climax selling with that volume bar.
Right. Yeah.
Okay.
And then we have gold, which is perked up above the 200-day moving average on Friday, on Thursday, Friday. I suspect that it's continuing higher today. I haven't looked at
just another 20 higher.
Yeah, there it is. I see it. Okay. We're still below the highs on gold. Silver also just really beat down. Really, it has to clear the 2250 level before we're going to get anywhere. Also on silver, anybody who trades it, I would encourage you to use a 30-day moving average. It's really interesting going back on the daily for months and months and months and months. So watch out for that quickly declining. A little over
2320.
You're right. Yeah, about 23.25. Yeah, would be that 30. That's a fast moving, declining 30-day.
And that's not too far away from the 200 either. They kind of converge there. Silver still had gold acting better. Gold silver ratio. We'll see if that changes. You follow the gold silver ratio for preferred longs and shorts and metals?
I do. I think it's currently in the 80s right now. I haven't looked at it in the last few days, but I think it's around the 80s. So it's pretty high. It's relatively
peaked around
high.
89 last week. Yeah,
right.
Mid 80s. So a lot of people, if you've been trading for a while, you probably remember 40 to 1.
Right.
In the gold silver
exactly.
ratio, right?
Exactly. Okay. And then you may remember like 100 to 1, way back, The euro and the dollar have also been verging on parity, because the euro for a long time was, much more valuable, in terms versus the dollar, but it's certainly come down. So we're seeing some potential parity there. There's the 10-year yield. We actually use a 250-day moving average on the daily. This is a 50 on the weekly, but 250-day on the 10-year yields are really interesting moving average. We like to look for those moving averages that really just make sense from a longer term. And here you can clearly see the great support at the 250. Again, it says 50, but it's on a weekly. And so we're seeing that pullback, that nice pullback in the yields, which I think everybody appreciates after this breathless rally we've had. I don't suspect this will remain that way, but as long as those recession fears, and also to a lesser extent, I think there's another health situation, another health scare globally that's going on. And so that's
the monkeypox.
Correct. And I think that also may be playing some role in people saying, are we going to have to reset expectations? Who knows what the guys in the back room are doing or how they're calculating, but they have to price all this stuff in. And at some point, Dale, they'll actually begin to price in the recovery. And they're not doing that now, but they will. And when they begin to price in the recovery, that's when you'll start seeing the markets go up. And we would expect that maybe sooner rather than later. Markets bottom before people realize it, and they top before people realize it. So we would expect, we don't expect the bottom to be instantaneous or very quick. It could be a while, but we just suspect that it will begin to, bottom and begin to rise before people really get the memo, the way it usually does.
Okay. So the oil, you're mainly focused on DBO is your preferred ETF on it?
Yeah, DBO is one that we use. We actually have an ETF. For those who like ETFs, let me come down here to our ETF leaderboard. So this is a service that we do that ranks all the ETFs. These are exchange traded funds by relative strength for position traders and also trend speed. And what we're doing here is we see that PSQ, which is the short QQQ ETF, is the number one. Corn and the dollar are number 2 and 3. So for those who are looking for momentum plays, or things that are really working in this environment, there's always a bull market somewhere. So here they are, PSQ, corn, UUP, then you have the commodity ETF, and then nothing but oil here. Oil, USO, XLE. I like IXC. That's a good one.
Okay, interesting. And beans.
And soybeans.
I mean, higher interest rates were never going to break the agricultural commodity market, right? Can you break something that grows and have constant demand? You could break things like maybe real estate or lumber or copper, economically sensitive commodities, but agricultural commodities, I don't know.
Yeah, good point. Good point. Yeah, right now, for example, our ETF leaders, what we do is we take these 3 that are at the top every week, and then we put them into a basket, like it's an actual portfolio, an ongoing portfolio. When we measure them against the S&P, and so far, our ETF leaders are only down 2.49% versus the S&P. So we feel like we're meeting the mark. We would rather be positive, but at least we're not down there in the doldrums where the S&P is. And then also sectors, we like to measure sectors for our members. A lot of our members like to do sector rotation strategies. And if you like to do that from a long-term perspective, right now, energy, utilities, and healthcare is showing some nice leadership recently. We had consumer staples as the number 3 for Q2 for sector rotation. And that's been that way for a while, but that hammering of Target, that hammering of Walmart, that hammering of Costco, these consumer staple stocks are just getting hammered. So it's caused healthcare to rise in the ranks. We're also seeing some strength there. Biotechs have been kind of lost in a lost decade, if you will. I think there's some opportunity there. Many of those stocks are trading below their literal. Yeah, their book. I mean, a lot of these companies have a lot of cash on hand, literally, and their shares are trading for less than the cash they have on hand. I mean, so many of these have just been, I think, Dale, I would sum it up, all that up this way, is just to say that you know this probably as well as anybody, that the biggest money that can be made in the entire market are in bear markets, where people get real fearful and they start throwing everything out. And if you're patient and if you can kind of sort through the stuff, and if you know what you're doing, it's a wonderful time for us. So it can be depressing to see your portfolio go down, but it can also be exciting, to find new opportunities for the long term. And I think that's really the gift that we all have right here. We've been through a lot the last few years, but people will reset their expectations, and we will have another recovery the way we always do, and that'll begin to be priced in, and there'll be a lot of opportunities ahead, whether you're a trader or an investor.
Yeah, I know some smart people that still believe there'll be a melt up before there's a a bust.
Sure.
So, I've just learned anything and everything is always possible.
Yes. Yes.
Right. It's an ongoing process of reassessing the new information that we get.
That's it. It's constant. The market is a voting machine, and it's always constantly processing all the new stuff. If you look at the S&P 500, again, speaking of that opportunity, we're down here where we haven't been in a while. 26% of the stocks that are in the S&P are trading above their 200-day moving average. So that, that's been a while. So typically if you start going long, anytime we're below 45%, and you have a long-term perspective, you're usually buying right. If you, again, long-term perspective, we're down here 26. If we're fortunate enough to get down here to where there's less than 10% of the stocks and the S&P trading above the 200-day, that's just going to be a screaming buy signal. Even if there's still a lot of fear around, it'll just represent a major, move away from the mean, if you will.
Okay. And, I tell you what, Jerry, do you sleep?
We've got a great team. I'll put it that way.
All right. You need a team definitely to do all this research and put it all together. And where are you from, Jerry?
I live, actually, we were just speaking about Walmart. I live just about 30 minutes from their headquarters. I live in Northwest Arkansas, down near Fayetteville, Arkansas. Beautiful area, lots of mountains, gorgeous, great people.
Raised there too?
Raised in St. Louis, went to school in Tulsa, and then came to Northwest Arkansas. And that's where we started. We came here to buy real estate and to invest in this area. It's a lovely area.
Yeah. Well, you have anyone ever tell you have a great voice for media, like radio or TV? You sound like an anchor.
Well, thank you very much. I appreciate it. I've heard that I have a good face for radio, but I've never heard about the voice.
They do that to all of us, don't they? All of us. They're always saying,
no.
Yeah. But
thank
really,
you for that.
Great demeanor. And I'm glad that I reached out on Twitter to talk to you, Jerry. And you have a great feel for what's going on and a lot of comprehensive information. And best way for people to follow you is on Twitter at FTM Daily.
Yeah, that's a great thing to do. Yeah, just follow us on Twitter at FTM Daily. And again, if people want to find our website, they can just go to followthemoney.com and just shoot us a note if you want to talk. We'd be happy to chat with anybody.
And at the minimum, follow Jerry at FTM Daily. And really glad that we made this connection. Jerry, I'd love to have you back sometime down the road.
Likewise, Dale. I appreciate the invite and I really enjoyed it.
And and now you're also my trading warrior brother. You made it through a Pinkert interview.
I'm proud.
Really, anyone who's been doing it for a few decades and has seen a few things and different cycles, as long as you have and still have the passion for the business, I salute you. So,
well, thank you.
I'm now rooting for you and all the people your words and writings touch. Okay, Jerry.
Well, thank you. Thank you, Dale. I really appreciate you and appreciate your work.
Thank you, buddy. So that's it. Follow Jerry and check him out. And then you could join the team in about 17 minutes for the morning edge. And don't just count your pips or shares or ETFs, count your blessings, and see everyone tomorrow. Thanks again, Jerry.
Thank you. Take care.